In continuation to our earlier video where we have discussed the interplay between Income Tax Act, Prevention of Money Laundering Act and role of Enforcement Directorate, we like to add some additional points on the case study what we had discussed in our earlier video. Just quick recapitulation of the case study. The advocate Mr. X has three clients A, B, C who wants to register their property but they don't have the accounted money. That means money in their bank account, they have only cash. So they have requested Mr. X to take the cash from them and deposit in the bank account of Mr. X. Then from that bank account, Mr. X will issue a check to the registration authority for registration of this property. Mr. X said that okay, I can allow you to use my bank account to deposit your cash, but for that you have to pay me the fees. They said that how much? That 10% of the registration fees. So A 5 lakhs, the fees he has to give to advocate A 50,000 rupees. Similarly B 80,000 rupees, C 1 lakh 20,000 rupees. So advocate Mr. X makes a total cash deposit 25 lakhs plus his fees 2 lakh 50,000. Now from this bank account he issue one check of 25 lakhs to the registration authority and another 2.5 lakhs he kept with him in his bank account. From this 2.5 lakhs he issued a check to his wife Mrs. X in her bank account to meet household expenses. Mrs. X used these 2 lakhs for household expenses, not completely. Only 50,000 used for household expenses and 1 lakh used to purchase a gold ornament and 50,000 invested in mutual fund. Now during assessments, when Income Tax Authority found that it is an unexplained cash credit to advocate X, they informed PMLA. Now PMLA came to find out what are the source and they said that it is unexplained. Then PMLA also looked into the bank account of Mr. X and Mrs. X. Mrs. X said that I have received my money from the bank account of Mr. X. That is an online transfer and that I have invested in gold, jewelry and mutual fund. But the Enforcement Directorate says that the source of this money is unaccounted because Mr. X fails to prove that this money belongs to A or B or C. So it is an unaccounted black money. So this unaccounted black money, when it is transferred to Mrs. X account, its nature still remain unaccounted black money. So whatever the gold Mrs. X purchased from her bank account, whatever the mutual fund investment Mrs. X made from her bank account, all will be confiscated by Enforcement Directorate ED under Prevention of Money Laundering Act. So you must be very careful that sources of money is important, not whether it is a transfer from bank to bank or not. So all the transaction you need to be very careful so that you should not come under the purview of Prevention of Money Laundering Act. Thank you.